Hey all, welcome to ShareTreck. Today is the 3rd of May 2022, and also we're going to hear from Jerome Powell today around 2 o'clock. So that's the event for the day. And what a day it was yesterday. I was looking at how the market was going, and my jaws dropped when in the last hour the market just spiked up. And since then I have been trying to find out why it happened, and a few theories are out there, but it's really like a whiplash. So let's talk all about that and do our daily update video. Let's get started. So here are the headlines today, and I'm going to start with something that resonates with me. A City trader makes a mistake, flash crash amidst thin volumes. This is a report from BBC. So what happened was yesterday, a trader at Citi made some mistake on the terminal while entering an order or a trade, and that resulted in an 8% drop in one of the European indexes, and a good drop in other European indices, only to recover and settle back down 1.87% from the previous day. This was a major event, and Citi claims that they found it within a minute and corrected it right away. But you can imagine the collateral damage here. There would be a lot of retail traders like us who would have seen the 8% drop, panicked, and decided to sell their stock, only to see that in a few minutes it's back up again, and they had lost almost 7 to 8% of their investment, assuming they were in a positive position to begin with. So that's one of the biggest tragedies. The second tragedy is that the particular trader who was involved in this is likely to have severe psychological problems in doing his or her job the next day. So even if they retain their job, they're not going to be able to function. A trader's job is basically very stressful, and useful trading life of a trader is very short because it's a high-stress job and it needs immense concentration and analytical skills and reflexes. So particularly this particular trader's job must be toast. Even if they have the job, they're going to be afraid to do this going forward. So I really feel for this trader. Having said that, let us look at our next headlines. The next headline is that the FOMC is going to issue a statement today. They are meeting at 2 o'clock, and at 2:30 Fed Powell will make a statement. In my opinion, the market is already priced in a 50 basis point hike. So if they come out and say they are going to do a 50 basis point hike, then I don't expect anything to go wrong. But if there is a communication which says that the next quarter is going to be another 50 basis point hike, I'll definitely expect the market to drop. But if they say that we are going to look at the effect of our 50 basis point hike and then decide closer to the next announcement, then I think the markets will be much more comfortable, and because we would probably see some effects on the inflation. Maybe the inflation might come down and the Fed can be less hawkish. So in that anticipation, the market could be better. So that's what I'm expecting. Let us see what happens at that time. Next, we have a tale of two cities. As I would say, I'm going to show you two results. One was for Avis, which jumped up yesterday after market hours, because they surpassed earning expectation on top and bottom lines, whereas Clorox said that they are going to expect a subdued year ahead. And so we are probably looking at a story where all the companies that suffered due to COVID are going to do better now, and those companies which thrived because of COVID are going to lose those revenues, and they're going to go back to normal. So this could probably be an early indicator that the pandemic is behind us and free flow of people and goods is happening. Therefore, there's going to be more economic activity, more productivity, and also labor shortages might get a bit eased up because labor can move across borders. And finally, we have the job opening and labor turnover survey report scheduled for 10 a.m. today. By the time I would have finished recording this and uploading this video, so we can't react to that. And we need time to understand what's happening. So this particular report is likely to give us an idea of the pressure on the labor market and whether it is starting to ease. If it has eased a little bit, that's a good sign. It indicates more probability of a soft landing. But if it is steep, then it indicates more probability for a recession, in my opinion. So I'll be watching that. And let us now look at our earnings. So we are going to have earnings coming from Moderna this morning. So right now I'm recording, so I don't know what's happening out there. CVS, which is again something I'm interested in. Regeneron, I've done what to expect, and I would like to see how much of that came up in Regeneron earnings report. Looking at all of those, and also Marriott, which again is going to show labor movement and people movement. So that's a good indicator. And of course, I'm looking on at Shopify on Thursday because I have some holdings, and hopefully they come up with a good outlook, and that can restore the confidence in the market for Shopify, because the shares have fallen very, very steeply. And of course, Wayfair is there, which is again consumer discretionary. So yeah, and Vertex again reports tomorrow. So there's a lot to look forward to. With that, let's go ahead and look at our indices and also try to figure out why we had that jump in the last hour of trading yesterday. So first, let's look at futures. The Nasdaq futures are up 0.20%, marginally up. That shows a bit of positivity, but these kind of marginal values at around 9:15 in the morning do not mean much. So it could easily go to negative. So we are going to leave that for now. Let's look at the VIX to get some clue at what happened yesterday. This is one of the things that I found out when I was trying to get some answers. You can see that we have a resistance line at 34.32. So we have been hitting that resistance line on a regular basis, and then coming back down. If you look at this particular candle, this is for today. The short candle is for third, and this was the candle for yesterday. So yesterday it seems that we hit the resistance, and then we dropped sharply on the VIX, and which is reflected in the jump in Nasdaq. So this is one of the explanations we have. But I don't buy it, because we have had much sharper plunges on the VIX. So that theory can be discounted. Now let us look at the 10-year. I'm going to a five-year view. If you look at the 10-year yields, we have had this line of resistance, which is at 3.05%. So whenever we touch 3.05% and drop back, we have been fine. If we use that as a hypothesis, then we can imagine that because we hit 3.057 and we have been bouncing back down from 3.057 on a regular basis, it's a very strong resistance. So it's possible that yesterday we did hit 3.057, and then we came back down sharply. And today we are likely to see whether we are going to go down further, because we're going to get the support from the 9-day exponential moving average. So that is one of the other theories that is floating around. It's because that we have approached the ultimate resistance for the 10-year USD yield, that the yields are going to start dropping, and as a result, stock prices are going up. So I don't know whether to believe this theory. Another theory that is doing the rounds is that the put call ratio has reached a resistance point at 1.318, and we have consistently bounced back down from that level. And it seems that yesterday we had touched that briefly and come down. Again, this theory doesn't make much sense to me, because in the past, the day before also, we had done the same thing, and we had not actually touched 1.3187 as of yesterday. We approached very close to it. So this theory does also not make any sense to me. However, the VIX is pointing to a lot of bearishness out here. And if we were to look at the US 2-year yield, again, the yields are dropping, which is a good sign. We have support from the 9-day exponential moving average. So overall, I think we are still in a bearish market, but I'm really afraid and trigger shy to make any comments on where things are going to go today because of what we saw yesterday. But we'll try to make the best of the situation. If we look at QQQ, the initial pre-market action seems to point to a marginal gain of 0.19%. So there is still a bullish bias in the morning. And if we understand the premise that the first hour of trading is generally from the retail traders, and most of the professional traders are coming in after 9:30 a.m. Somewhere around 10 o'clock is when they would start their activities, and they would peak their activities towards the end of the day. I would assume that a lot of retail investors are likely to assume that the bull market has started and they might be coming in. That could give us this positive reading here. So personally, I'm not convinced that we are in a bull market yet. I think we need to wait for Fed Powell to speak, and then we'll probably get an idea of where the market is going. Because right now there is too much of uncertainty. All the risks are still in place. Nothing has changed. There are a few good reports here and there for earnings, but overall it's a mixed bag. So I'm going to stay put. And yeah, with that, let's go and have a look at some other factors that we can consider. The other theory is around the US dollar index. So if the US dollar index keeps going up, that means money is taken out of the stock market and other places and it's going into US dollars. But when US dollar index starts falling, that means money is being bought into stock market and other markets. So there is this key resistance at 12.708. And we hit that twice. We hit that day before and we hit that yesterday. So this is again touted as one of the reasons, but I don't think that is possible, because the previous day we had seen that we had touched that level, and today again we are likely to test this level, because we were not far off from it when we closed yesterday. So we'll have to see what happens. If you look at the momentum and the RSI is absolutely in an overbought state, so it has got to come down. The MACD is still bullish. So we'll see what happens with the market action out here. But it's very interesting how different traders are looking at, different analysts are looking at different indicators to get an idea. So I'm going to incorporate some of these things into our daily analysis so that we can get multi-dimensional view and see if any of them helps us to figure the direction for the market. But whatever it is, I think overall, this is a great time to buy absolutely fantastic stocks which are at rock bottom price. You could average your way down, or probably you could average your way up. But either way, I don't think there's a better time to buy stocks than now. These kind of times have come in the past. And if we look at our NASDAQ, let me go and move into the NASDAQ. And if you look at NASDAQ, many times in the past, we have had drops. And these drops have been significant, like 20% drops and 30% drops and 40% drops. But we have always come back up. So I'm absolutely confident that in the long run, we are going to come back up. So there is no need to fear. It's just that you should not put all the money into stock market, especially for people who are retirees like myself. We need to keep certain amount of money in cash, maybe in fixed deposit somewhere, or in GICs, or whatever you may call it, where it is easily available, maybe 6 months of living expenditure, because that way you do not have to sell your shares for your bread and butter. You can use the cash reserve out there while you wait for the market to come back up again. And I wouldn't recommend putting that 6-month reserve into the market right now, because we don't know how deep it's going to go and how long it's going to stay. But generally in a 6-month time period, the market always reverses and gains back some of the losses at least. So that's my thought for today. And with that, let's go and have a look at our genomic shares. So here are our genomic shares. Just going to sort it out so that we have the winners on the top. Vertex is doing well, despite the fact that there was a news report about Vertex getting the VX880 placed on hold by FDA. So this is a negative news. Vertex Pharmaceuticals said Monday the FDA has placed its phase 1 of 2 study of VX880 to treat type 1 diabetes on clinical hold in the US. The company said the FDA determined that there is insufficient information to support dose escalation with the product. And we are surprised by the clinical hold placed on the study, said Chief Medical Officer Carmen Bojic. The results from the first 2 patients treated with half the target dose established proof of concept by demonstrating that VX880 can restore glucose-regulated insulin production and improve glycemic control. We are committed to working with the FDA to understand and address their questions so that the trial can resume at US sites as soon as possible. Vertex shares were down almost 6% in the afternoon trading. So this is a sympathetic bounce back from yesterday's battering. Teladoc also, there is no new news in the horizon. It's just trying to reclaim some of those extreme drops that it faced earlier as more and more people get comfortable with the current situation with Teladoc. I think that today is also a volatile day. It would be a futile exercise going through each and every share and looking at technicals only to find out that whatever we think is going to happen is not going to happen. So I'm going to skip that for today, but we'll definitely look at our index. Let us see where our index is. IMTX, TNA, EDIT, PACB, Beam, ArcG, Regeneron, Illumina, Vertex, IDNA. This is what I was looking for. So when we look at IDNA, it's marginally up by 0.36%. This sector is extremely weak, and we have the 9-day exponential average, 20-day, 100-day, and 50-day above it. And our momentum is absolutely weak, just about picking up, and MACD is bearish. So the whole genomic sector is weak at this point of time. And therefore, I think we are supposed to look forward to bearishness. If any positive comes, that's a blip. We need to find the bottom for this market. Let us look forward to Fed Powell's speech and see if that can determine the direction for the market. And from there on, we'll see what happens and look at all the indicators and try to get some feeling whether we can confidently predict the price action. If not, we'll just skip it for the time being. So with that, I would like to bring this session to an end. I'm sorry I'm not able to give you any specific directions. Most people can't do that. There's hardly any analyst or any market participant who is able to determine confidently 100% of the time what's going to happen going forward. And these are volatile times. So that's why I would not give you any prediction for the day. But I would definitely say that we are still in a bear market. We have not turned over to the bullish side. Wait for the FOMC meeting and we'll see after that. Thanks and have a great day. Bye for now.